Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talks and I am Hiral Dadia. Clearly, if you go to see an interesting day of trade, day where it is absolutely earnings heavy as well. And if you see from a market's perspective, GIFT Nifty, a clear weak start is what it is indicating in today's session. Now, this is mainly taking cues from what's happening in the global markets as well. If you see US, we've ended lower. Asian markets have also been trading weak. Let's just quickly run through the levels that we've seen. Yesterday's session, though, after 3 days of decline, you've actually seen the domestic markets that have bounced back, and you had Nifty, which ended 80 points higher to close at around 19,800. So slightly above those levels is where we've ended. Apart from that, if you see Bank Nifty, we've seen gains of almost 0.4% coming in there, and it was mainly the banking and financial space that outperformed in yesterday's session. And the clear highlight has been the PSU index. It's not only the PSU banks, but even the other PSU companies, names like ITDC, MMTC, all of them have been seeing a good run in yesterday's session. Moving on, a couple of other sectors which have been in focus is the real estate space on the way the Q2 numbers have come in, specifically from developers from Bangalore as well as Mumbai. But with that, that is providing momentum to the housing finance companies as well. If you see names like Canfin Homes, Star, all of these were up in yesterday's session, a PNB Housing Finance as well. So let's see if that rally continues in today's session from a housing finance perspective. One other aspect we need to consider over here, taking the Indian markets into consideration, is that there is some bit of resilience that we have been seeing, and that's mainly on the way the dollar index has been moving, the way crude prices have been inching higher, as well as the way bond yields have been moving. Now, all of these three factors are actually making Indian markets also pretty resilient, and that's one of the reasons why we are seeing that stiff resistance come in at levels of around 19,800. I mean, these are factors which are not really letting markets move higher. But the key focus does continue to remain on earnings, and that's one of the key factors that we have been watching out for as well. It has mainly been, the IT space that has started reporting numbers. A couple of banks like HDFC Bank, though the expectation was that post earnings we could see a gap down opening, we did see the stock open gap up and continue the momentum. Now you do have a Bajaj Finance that has reported numbers. Let's understand from Pragati, who's standing by to get us more in terms of what the numbers indicate and what brokerages are telling us. Good morning, Pragati.
Morning, Hiral. So, Bajaj Finance, yes, did report its numbers on Tuesday, and they were not just good, but analysts have said that they were pretty impressive and largely met the estimates as well. If you look at the numbers and a quick overview, the net profit is up 26% year on year. The total income and NII are also up. The AUM is also up about 35% year on year. But this is like the one side of the narrative. The other side, and some very important points were highlighted by the management as well. The NIMs have compressed at about 14 basis points quarter on quarter, and the management expects another 25 to 30 basis points of NIM compression in FY24. But this is largely due to a rise in the cost of funds, and the management has guided that the operating leverage will play through. If you look at the asset quality as well, it is largely flat with gross NPAs up 4 basis points quarter on quarter. But the management has said that there's nothing much to worry about here because this is due to the higher number of days in the quarter. The risk metrics, if we look at, are largely stable across all businesses except for the rural B2C business, and the management has said that they have taken some risk action in this segment as well. Couple of clarifications and new announcements also came from the management. If you look at the capital raise, which was approved by the board of about 10,000 crore, Jefferies has said that it will add about 18% to the net worth with about 2% dilution of equity. So this is a very interesting point that has come up. The management also clarified on the growth of unsecured personal loans, because this was one particular point that was brought up in the RBI MPC as well. The management said that they're closely monitoring this entire thing, and it is largely moderate in value as of now. Another important announcement that was made by the management was that that the microfinance pilot is expected to go live across 100 locations by March 2024. And as many analysts also questioned in the call about Bajaj Housing Finance Limited going up on the exchanges, the management clarified that it is about 8 quarters away, and it has also requested for an extension. Overall, Hiral, if we see, it's a very good set of numbers, and even the analysts have given a thumbs up. Jefferies has maintained a buy rating with a revised target price of 9620, and HSBC has also maintained a buy rating with a revised target price of 9470.
Right. So, I mean, that's going to be interesting to watch out for as well, because yesterday, clearly, both the counters ahead of numbers were the top gainers in terms of Nifty 50 as well, on the positive side. Let's see if this positivity does continue in today's session as well for both the names. Thank you, Pragati, for getting us the details. So, that's with regards to where Bajaj Finance goes. Clearly, the momentum has continued. But moving on, you had a couple of other earnings that came in post-market hours. Himadri, Tata Elxsi, Huhtamaki, Syngene. A few of these names did post good numbers. However, there was some bit of a downtick coming in for a VST Industries as well as a ICICI Prudential. You have Varsha standing by to give us more in terms of what the numbers indicate and what's she picking up. Good morning, Varsha.
Good morning. So let's start with some tech companies. First, we have Tata Elxsi, which reported its Q2 numbers, and the revenues were up 3% to rupees 881 crore versus 850 crore last year. EBIT was up almost 3.68%, and margins were at 27%, which did beat estimate of Bloomberg. Then, if you see the transportation growth, it was almost 7.1% quarter on quarter, and there was the healthcare grew at 3.6%, driven by new product engineering and digital health and regulatory services. Also, the media and communication grew marginally at 0.1%, while the industrial design revenue crosses almost 100 crores for the first time, growing at 35% year on year. Then we have L&T Technology Services, where the revenue for the group rose almost 3.69%, and the operational performance continues to be healthy with an EBIT margin of 17%, nearly flat on sequential basis, even as company absorbed the wage hikes and the investments in new technologies. Also, company has lowered its growth guidance for the fiscal ending March 24, even as its top line met analyst estimates in July-September quarter. Also, the company now pegs its FY24 guidance at 17.5 to 18.5%, as against 20% estimated earlier. While longer term trends for company remains strong, in the short term, company seeing longer decision cycles and incremental headwinds from the macro stress in various geographies. Also, the company won several deals worth more than $10 million and 6 deals worth more than $15 million in July-September period. So good deal wins, but yeah, there was surprise lower guidance by the company. Then we have Jinsar Technologies, where the revenue rose almost 1% over the previous quarter. Banking and financial services reported a sequential revenue growth of 3.1% in constant currency terms. The manufacturing and consumer services reported a growth of almost 6.7%. Now then, high-tech reported a sequential revenue decline of 8%, followed by healthcare and life sciences, which shrank 1.5% sequentially. Then we have let's start with the pharma and chemical companies. So we have Himadri Specialty Chemical, where the revenue was down 5%, but company saw growth in volumes, in sales volumes of around 14%, and the margin were at 15% versus 9% due to decrease in material cost. Also, net profit increased 2.8x due to consistent move towards value-added products by the company. Then we have Syngene International, where the second quarter revenue from operation rose almost 18% year on year, and company reported 14% year on year jump in net profit to 117 crore, which was led by development and manufacturing services, and EBITDA rose 19% and EBITDA margin remained flat. Now, a net profit before exceptional items rose 20%. The exceptional items remains pertains to the transaction cost relating to the acquisition which company had done for Stelis Biopharma, and the long-term fundamentals remain strong for the company. But the company expects growth at a lower level in the second half of the year. Then we have ICICI Prudential, where revenue was down 23%, but company reported an increase in profit in the second quarter, which was in line with analyst estimates. But its new business margin fell by 298 basis points. And the company's net profit rose 22% year on year. Sequentially, the bottom line expanded 18%, and the firm's net premium rose 5% year on year, while the value of new business, the present value of the future profit associated with new business during the period fell 17%, and the value of new business margin contracted to 28% from 31%. Then we have Canfin Homes, which is the housing finance arm of Canara Bank, reported 11.5% year-on-year jump in net profit. The net interest income jumped 26%, and also the GNPA, that is gross non-performing assets, stood at 0.76% in September quarter against 0.63% in June quarter, and the net NPA came to 0.43% against 0.34% quarter on quarter. Then we have CIE Automotive India, where revenue from operation rose to rupees 2,279 crore, which is up to 2%. And also the profit, if you see that this includes the forging business under Stores Group, which has been sold. So that is clubbed under profit from discontinued operations, that amounts to 188 crore. And lastly, we have VST Industries, where there was uptick in revenue of 2.86%. EBITDA was down 15%, while margins were at 17% versus 21% last year due to increasing cost of material consumed. And if you see here, the net profit was down 17% at 75 crore versus 92 crore last year.
Right. Thank you for getting us the details, Varsha. So, whole host of numbers, as Varsha has been mentioning, but clearly, what comes to my radar is Himadri, Tata Elxsi, Huhtamaki, Syngene, as well as VST Industries and ICICI Prudential that could see a reaction in today's session, whereas L&T Technologies, again, on the way, the guidance has been cut, will be interesting to watch out for. Bajaj Finance and Azensar are few of the other names that we will be watching out for as well. But let's move on to the companies that will be reporting numbers in today's session. Now, clearly, from the IT pack, you do have a Wipro, you have a Bajaj Auto from the auto space, and an IndusInd Bank from the banking space, which are heavyweights that will be reporting numbers. But to start off with, firstly, and before that, the screen tells you the other smaller names as well, names like Polycab, ICICI Lombard, Bandhan Bank, Z Entertainment, Titagar Rail Systems, SG Finserv, Heritage Foods, 5 Paisa Capital, and a Shopper Stop, to name a few. And all of these, somewhere or the other, have seen good moves in the last 2 to 3 months. But now let's head across to Tushar to get us more details in terms of what's expected from a Wipro after the kind of numbers that we've seen from a Infosys as well as a TCS. Tushar, good morning. What's the key expectation that you have been watching out for?
Good morning, Hiral. More of the same when you compare with Infosys and HCL Tech and the TCS, like the larger peers for Wipro. So growth at Wipro is likely to falter again for a third time in the July-September quarter. It may decline by 1 to 1.2%. While that is, its peers have performed much better, but there are few questions that Wipro needs to answer. The earnings will be muted, but we would like to see management commentary on on some of the angles. So first question that the management has to answer: when will the conversion of deals to revenue happen? It's not happening for the larger peers. It's not happening for Wipro. So where does Wipro see this conversion start kicking in? The larger deals, for example, in the case of HCL Tech, they expect the Verizon to start paying off by the end of FY24. Same thing with Infosys; their large deals will start paying off. Wipro doesn't have such large deals so far. So we would like to know when the conversion of deals to revenue will happen. Second, when will Wipro start delivering industry matching growth? While the industry growth itself is not so much to talk about, Wipro is still lagging them. It's in the negative territory. Growth is in the negative territory. So when will it go back to the industry matching numbers? Third is the quantum of salary hikes. So Wipro has deferred by a quarter or so salary hikes for all its employees. The wage hikes are supposedly supposed to come by about 1st December. Who will the salary hikes go to? Will it go to the senior management or will it go to the rank and file? Now, this question is very important in the sense that Wipro has seen a senior level exodus since CEO Thierry Delaporte came in. They are a bit wary, they're a bit nervous. So, will the salary hikes go to them or to the rank and file? What has been the impact of these senior level exodus on the business? Now, in the last quarter, this the exodus that we are talking about was topped by the exit of the chief financial officer Jatin Dalal, who was with the company for more than 20 years. So, will there be an impact on the business now? Another question that Wipro needs to answer is the consulting practice. If you remember, 2 years ago, or little more than 2 years, ago, Wipro acquired Capco in its biggest acquisition yet to hold the client life cycle end to end, from consulting to delivery. That has the Capco acquisition is not yet meaningfully reflecting in the revenues. So we would like the management to comment on the fact that when will it start happening. Finally, what are the final margin levers in play for the company? So Wipro is likely to maintain its operational profitability in Q2, maybe some improvement as well. But what are the margin levers left now? So far, they had delayed wage hikes which supported margins. Now utilization is up, automation is up, wage hikes have been gone out. So what else does Wipro have to keep its margins afloat? So those are the key factors I think that management has to talk about. Peter.
Right. Thanks, Tushar, for getting us the details well articulated as well, because these are few of the questions that need to be taken with the management as well post the earnings to understand what's the trajectory going ahead. Thank you for that. But moving on, Bajaj Auto reports numbers as well in today's session. Clearly, the trend that we've been witnessing is from a volume perspective. Yes, there is a downtick in terms of the quarter. However, does not seem like that it will impact the profitability at any cost. We have Vinay who's standing by to get us more details in terms of what are his key expectations from a number perspective, and what are the key factors he will be watching out for. Vinay, good morning. What do you have for us?
Good morning, Hiral. So, yes, as you said, the profit is likely to rise 17%, and this is largely due to higher share of premium vehicles and the price hikes that the company took over the last 1 year. So, you have said that two-wheeler sales have fallen 13% in the quarter, and this has been on a higher base. So, the lower sales have come on a higher base because last year the company's inventory was depleted completely because of a shortage of semiconductors. So in a comparable quarter, the company pushed sales to the dealer inventory, and that's why the higher base. The revenue of the company is likely to rise 10% for the same reasons that we saw in the profit as well. So the margin is also likely to expand to over 19.5% compared to 17.7% last year. So investors will look for a couple of comments from the company, mostly on the export side, as to how they are recovering, and because there have been some concerns around margins or the currency not being available in the export markets. And the investors will also look for the company's comments on how the sales are doing, that they have launched a bike with Triumph in collaboration with Triumph. The investors will look as to how the sales are doing on that front. Back to you, Hiral.
Right. Thanks, Vinay, for getting us the details. So this will be the first company that will be reporting numbers as well. We had an IndusInd Bank, but I think there's a slight glitch in terms of getting the numbers for you. We will come back to you with the same. But apart from this, a lot of other stocks which are in focus in today's session on the back of news. Rishi standing by to get us more. Rishi, good morning. What do you have for us?
So firstly, there is Hindustan Urban Development Corporation, or HUDCO, where the government has agreed to sell up to 7% stake via an OFS at a floor price of 79 rupees per share. Now, this is at a discount of 12.17% to yesterday's closing price. Now, this OFS will initially be for 3.5%, and with the remaining 3.5% representing a green shoe option. Now, the overall OFS will generate about 1,100 crores for the government and reduce its stake from 74.8 to 74.81% from the current 81.81%, assuming a 7% OFS. Then we have Mazagon Dock Shipbuilders, which has signed a 310 crore contract with the Ministry of Defense. Now, the contract is for the construction of a training ship for the Indian Coast Guard. Then we have HPCL, where the company has entered into an agreement with Petromin, which is a Saudi Arabian lubricants and automotive services based company. Now, now HPCL will rent out space for Petromin express stations in its retail outlets, and in the service centers of Petromin, the HPCL's lubes will be used for servicing vehicles. Now, about 16 such stations have already been set up in Bangalore as well as Chennai, and over the next 5 years, about a total of 1,000 Petromin stations will be set up at HPCL's retail outlets across India.
And is
Then
set
there
to
is
report.
Biocon, where the US FDA has determined the inspection classification at the company's subsidiaries Malaysia unit as OAI, which stands for Official Action Indicated. Now, an OAI status may cause a delay or withholding of pending product approvals or supplements that come from the facility. Now, this inspection for the same was conducted in July 2023. Then Zomato and IRCTC have tied up for the supply and delivery of pre-ordered meals through IRCTC's e-catering portal. Now, as a proof of concept, 5 railway stations will be used for the proof of concept, which is Delhi, Prayagraj, Kanpur, Lucknow, and Varanasi. Then we have Bajaj Electricals, which has received a 347 crore service contract from the Power Grid Corporation. Now, this order is for a 765 kilowatt transmission line of a length of 109 kilometers in Rajasthan, and the project is expected to be completed in 15 months. Then we have Tejas Networks, where Fiber Connect has launched its broadband services in Italy. Now, Tejas Networks benefits from this because it is the sole supplier of optical networking and broadband products of Fiber Connect. So this stock is also another thing to do, another stock to watch out for in today's session.
Thanks, Rishi, for getting us the details. So interesting names that could see somewhat of a stock reaction in today's session. Thank you for those. So that's all the action that we have been seeing in terms of where primary markets are concerned. However, in the midst of all this hustle, you have IRM Energy. The IPO does open today as well. And clearly, if you see, it's going to be an interesting one because it's absolutely in the midst of the earnings season. Mika standing by to get us more in terms of what the company does, how much are they raising, and what the anchor book has told us so far.
Yeah. So IRM Energy IPOs will go live today and will go on till October 20th. It plans to raise 545.5 crores via fresh issue of 1.08 crore shares. The price band fixed is between 480 rupees to 505 rupees per share. The company has also raised 160.34 crores prior to the IPO from 12 anchor investors. 31.75 lakh shares were allotted at a price of 505 per share. The company plans to use the proceeds. Around 307.26 crores will be allotted for capex development of a city gas distribution network in Tamil Nadu, and 135 crore rupees will be used for pre or repayment of outstanding borrowings, and the rest will be used for general corporate purposes. A little bit about the business. It is a city gas distribution company in India and mainly operates in the states of Gujarat, Punjab, Tamil Nadu, Daman, and Diu. It builds, operates, and expands city or local natural gas distribution networks and develops gas distribution products. And the customers that it usually caters to belong to industrial, commercial, domestic, and the automobile sector. In terms of financials, its FY 2023 revenue of 980 crores were 5 times of the FY 21 crore revenue. Its EBITDA has also grown 63% in the last 2 years. However, the margins of 12% in FY 23 were 26% lower than FY 21 margins, but the net profit has grown 81% in that time period. Once it enters the markets, it peers would be the likes of Gujarat Gas, Indraprastha Gas, Mahanagar Gas, and Adani Total Gas.
Right. So this is going to be interesting to see, how it stacks up as well. And you have the oil and gas space that has been in the news as well, taking into consideration the way crude prices are moving. Thanks, Mika, for getting us the details as well. So that's with regards to the primary markets. But clearly, a lot of action that is on the cards. We're just a couple of minutes away from markets opening. So we've already mentioned the heavyweights, Bajaj Finance, an interesting one to watch out for in today's session. So keep your eyes absolutely at it, and a lot of other managements that you will be able to hear as well on BQ Prime. Please stay tuned.